Hello everyone, welcome to the channel where we provide you with that financial education and information. Now in today's video, I'm going to show you how you could build generational wealth with your income tax return. That's right, you can use your income tax return to put in a life insurance policy and build generational wealth. Now the example or the case study I have here is a 30-year-old female funding the policy with $10,000 per year for 30 years. Now, this type of policy is a whole life policy that's designed for high cash value up front. It's not your regular whole life policy that has no cash value in the first year or two. In this particular policy, designed for infinite banking, we're structuring it a high cash value up front and a reduced death benefit to start with, lower costs. Okay, so let's look at it. Year one, the person is funding the policy with $10,000 per year, right? So they have $10,000 per year. Cash value available right in the first year is $84.08. That's 84% of their premiums paid is available in cash value, not a big fat zero. The death benefit is $373,495. Pretty good. Let's jump to year 10. 10 years into the policy, they have $100,000 funded in the policy. So right after 10 years, they're already ahead of the game. They've got $109,586 in cash value and $741,975. So pretty much $742 in death benefit. So in 10 years of putting money into this policy, they put $100,000 in, and if they died after 10 years, their beneficiary would get $742, a lot more than they put in, right? Plus they have more in cash value to go utilize and leverage that and make more money. In year 20, $200,000, $285, $265, so it's working, it's going. Your death benefit is increasing, $1,096,922. So why is your death benefit increasing? Remember, we structured it with a reduced death benefit to begin with, right? So it has to satisfy the IRS MEC limit, because remember, based on the amount of money that you're funding the policy with, and your age and your gender and all that, there has to be a minimum death benefit that goes with it. So we have to satisfy the IRS limits so we do not have a taxable event, right? So that's why your death benefit has to go up to match, because you continue to fund the policy, right? So year 30, 300,000, you're done funding, 566,128. So you put 300,000 in the policy, but now you have 566,128 after 30 years, almost double, right? In cash value that you can leverage and go purchase assets and produce income and make money, pay back your policy and have your policy continue to grow. And now you have $1,436,500 in death benefits. So if you died after 30 years, you put 300,000 in, you have almost almost five times what you fund the policy with, right? Pretty good. Year 40 now, 10 years after you're done paying, it's $300,000, because remember, you're done paying premium now. The policy continues to grow even though you're done paying. It keeps compounding. Now it's at $877,157. So in 10 years, you gain an additional $300,000 in cash value by doing nothing. You didn't fund it anymore, right? It just keeps growing, right? And it's risk-free. So you have $1,562,724 in death benefit, right? So your death benefit continued to grow, right? Even though you're done paying, because as your cash value grow, your death benefit is also going to grow, because it's still life insurance. You can't self-insure. The insurance company still has to be at risk for some type of death benefit. And that risk would be the difference between your death benefit and your cash value. So when a policy is structured like this for maximum cash value, you actually pay less in the future as you get older. People are thinking, hey, why? I thought that as you grow older, insurance costs more. Right, but that is true. It costs more per $1,000 of coverage. However, what is not usually stated in that statement is that what the insurance company is actually at risk for is the net amount at risk, which is the difference between the death benefit and the cash value. So in this case, they will be at risk for about 700,000, not the whole 1.56 million. Okay. All right. So year 50. Again, we're not paying anything in anymore. $300,000. Cash value is now 1,340,351. All right. That's another 500,000. Then we have 1,878,742 in death benefit. Now that's at 80 years old, right? 80 years old, $300,000 is paid into the policy, and the cash value is 1.34 million, and the death benefit is 1.79 million, right? Pretty darn good. A lot more than what you put in. Now, this type of policy really goes up to age 121 or 120 in most cases. So if you live to that age, the insurance company will just pay the death benefit. The policy is expired at that point. Most people don't live to that age. Fair to say that, right? So most people don't. So let's take something more realistic. 90 years old. Can you live till 90? That's pretty achievable. A lot of people can live till 90, right? So let's say you live 10 more years. After your 80th year in the policy, 80 years old in the policy, you live till age 90. Not paying anything else, still 300,000. Your cash value is now 2,002,432, right? And the death benefit is 2,326,922. All right. So just by living longer, not doing anything else, living longer, you can pass on an additional 500,000 to your heirs just by living longer, not doing anything else. So see how powerful this type of policy is that's structured right for high cash value, and the death benefit is going to increase with the cash value. And by long after you stop funding the policy, it's still growing. And just by living an additional 10 years from 80 years to 90, you pass on an additional $500,000 to your heirs to continue your legacy and build more generational wealth and follow the same process that you did. Very powerful structure here, very powerful system. So I hope the video was insightful for you. I hope it helped you. I hope you find a lot of value in it. And if you did, please go ahead and tell us you like it by doing that. And share it with a friend or family that could use the information. And be sure to subscribe if you haven't already done so, and hit the notification bell so whenever a video is released, you're one of the first to be notified. Until next time, see you soon.